thanks so much for tuning into the Trade Setup. I'm Neeraj Shah. A lot of you commented yesterday that the voice was sounding a bit hollow. I'm trying this out. Let's see. I think this should work well. This is how we do our interviews. But nevertheless, let's try and take stock of the situation. So the global markets, firstly, and they looked in reasonably fine fettle, if you will. I mean, if not fine fettle, then at least they looked okay and ended marginally in the green. Nasdaq and the S&P 500. Now, the big thing that happened, and maybe which comforted the markets a little bit sentimentally, was the release of the Fed minutes, right? I really don't think the Fed minutes altered the course of the market even intraday yesterday, but just look at what they've said. The minutes say, a reiteration of what the officials have been saying, or Jerome Powell has been saying, that the Fed officials, of course, expressed the need for patience. The committee said that overall the conditions, while they have done well, have not met the substantial further progress benchmark to start tightening the policy. Much as people believe that the Fed will start tightening, for now, they don't believe that this has happened. And the minutes reiterated the Fed's view that the current inflationary trend is transitory. Now, I don't, what more does the Fed need to do? I don't know to explain its current stance, but it is explained as well. Of course, the market will, in its wisdom, some people might believe that the Fed might be behind the curve. Who knows? I mean, this is too much for us to digest, really. But yeah, this is the long and short of what I made out of what the Fed minutes had to say. So this is one key thing. Now, what is this doing to the rest of the markets? That's the point that we have to try to figure out. I don't think there is any untoward positive or a negative or a very big positive out of what the global markets are doing. Sure, the futures are okay, but Asia is a mixed bag, maybe a bit of red on the screen, but a mixed bag largely. And Indian markets after having done well yesterday, yes, the rub of the green is on our side. There is a momentum which maybe got built yesterday in some of the risk or not risk really, but high beta pockets. But we are likely to start off maybe marginally lower. Does this mean that we will not trend higher? Maybe we could. Who knows? Really, yesterday in the second half of trade, there was this big leg up in metals, banks, etc., which all did really well. So therefore, net, maybe we could be looking at a positive move. Now, the trade setup, then the MOE function, then we'll go on to the specific stocks. So first, the trade setup. I mean, what is the trade setup looking like? To my mind, that with the cabinet reshuffle behind us, it's behind. So therefore, that if people believe there was an overhang or a positive, that's out of the way. I think a lot of messages, and so many people have messaged me that, oh, this sector will now run because this minister is there or not there, etc. I think it's a risky thing to do, really. So might be a very risky to play themes based on the portfolios allocated. Sure, some may do well, but please be mindful that always eventually follows earnings. So please be mindful of that. I think the risk on mooted rate sensitives and metals may get extended to them. There are reasons for both of these. I'll explain them in a minute. And ahead of Zomato's mega IPO, I think the dates are now final, July 14 to 16th, if I'm not wrong. But both current IPOs, which is Clean Science and GR, have gotten fully subscribed. So the momentum in the IPO market or the primary market for good issues is certainly there. It'll be very interesting to see what happens to Zomato. That's that big, I mean, ahead of Paytm IPO coming in. Paytm and Zomato, arguably the two huge IPOs. And it'll be very interesting to see what happens to subscription in both of these. Naturally, they will not get subscribed X times by retail or HNI simply because the quantums are so high. Well, it'll be interesting to see what happens there. I hear the QRB book for Zomato is actually looking very, very robust. From what investment bankers are telling us, there is a huge demand for Zomato. So it'll be very, very interesting to see what happens there. Now, what happened in trade yesterday, just very quickly before we move to stocks, because some of this might have a bearing in trade today as well. Look at that. The market breadth was positive, 283 advancing to 209 declining, and a bunch of reactions to news, results, what have you. Equitas, that update that came out, look at what Equitas did, 18% higher in trade, very high volumes as well. Edelweiss has a good move. Brokerages seem to be continuing to do well. So Edelweiss, Motilal Oswal, they're playing a bit of a catch-up, really. Paper continued to do well. So after sugar has taken a bit of a backseat, we're continuously seeing paper stocks do well. JK Paper was up 5%. Ajay Srivastava was talking about that yesterday. So very good moves in some of those names in trade. On the flip side, Natco, because of specific news, corrected. Some of the textile names like Trident, after having gone well, corrected. And midcap IT has taken a bit of a backseat in trade yesterday, but I think that will change today. Now, a few things and a few stocks that all of us should keep in mind today. These are the key important names to be watched out for in the session. I'll start off with none other than TCS, right? The results come out today. The expectation is that they might actually do, yeah, let's stick with this plate, but just hear me out, viewers. The expectation is that they might do about 3.5% growth and strong deal wins. So that could be interesting. The other interesting bit is that the valuation discount for versus TCS and Infosys has narrowed down a little bit. Look at FY22, by the way, both trading at 30 times. Typically, TCS has traded at a premium to Infosys in a big way. Relative to all the other IT majors, TCS, I think over the last few months or 1 year has kind of underperformed, so to say. It's very interesting to see what happens to TCS if it indeed delivers very strongly and does well. So keep in mind, I mean, I think but the ISG data suggests that there could be some upticks there. So it will be very interesting to see what happens to IP in the session today. We will, of course, talk about the Macquarie note on IT in a bit because that has some very interesting data for IT. So keep that at the back of your mind. But TCS, very, very important today. The only conundrum, viewers, to my mind in TCS is that yes, it has underperformed, and it's the larger expectation is that it will clock in about 3.5% growth with very strong deal wins, which should augur very well. The whisper number on the street is saying that maybe there could be a bit of a subdued performance. So quite unlike the last few times, there is no clear answer to how to position yourself ahead of trade. At least I don't have right now ahead of trade for TCS. So it'll be very interesting to see. Yep, this is, of course, what IT has done over the last 3 months. The last 3 months, of course, as you can see, HCL Tech, TCS amongst the companies which haven't performed as much. Infosys, incidentally, is up about 10% in the same period. So which is the point that we were trying to make, that the valuation discount between Infi and TCS has narrowed considerably over the last 12 months and, of course, over the last 3 months. And this is what places TCS in a sweet spot ahead of these numbers. Wipro, incidentally, has gained 21% in the last 3 months. So yeah, pretty strong statistics out there favoring a trade in TCS if TCS delivers. PNB Housing could be interesting. PNB Housing Finance, I mean, they've received a letter from PNB asking it to consider the restructuring of its fundraising plans. The PNB board is of the opinion that the company should take cognizance of SEBI's letter. Now, viewers, I think a few quarters in the market should or will take this positively, because this would probably mean that if you restructure in some fashion or the other, the suitors might, or the market may believe that the suitors will have to up the pricing, and this should only augur well. Remember, a couple of suitors have sold some of the other stakes in order to presumably raise the war chest for upping the or sweetening the deal for PNB Housing Finance. I would think that the market might take it that way, and I wouldn't be surprised if PNB Housing Finance, if not today, then over the course of the next few days, might have a good move. So watch out for that. Bajaj Healthcare received a license from DRDO to manufacture a COVID vaccine. Watch out for that whole group. The Bajaj group has hit a particular milestone on market cap as well. It should be interesting. There are some other stocks in focus, including Indian Hotels. The investor meet, I thought, has incremental positives. There are talks of improving EBITDA margins, improving return ratios, not investing too much in capex. All of that should probably augur well. Keep in mind, though, that the stock had rallied 5% and then closed lower from the highs of the day. It'll be interesting to see what it does today. I think the Motilal Oswal note is pretty positive on this one. 18% uptick. The target price is 18% above the current market price as per Motilal Oswal. Aries Agro, I got some forwards about a smart investor checking into the stock. So do watch out for this one. And I think steel stocks will be in focus now because HRC prices in China have inched higher, and that will aid sentiment. We already saw yesterday the likes of SAIL, Tata Steel, etc. do well. I wouldn't be surprised if that momentum continues. And by the way, like I was saying, why metals and banks will do well. For banks, I think Credit Suisse is giving a very strong view, saying that the credit growth will pick up, and banks are some of them are at a price to book discount to the market, and therefore it stays a strong overweight on banks. with Axis, ICICI, and SBI being top picks for Credit Suisse. So, which is why I was saying that we might maybe see some continuation of momentum. However, if indeed banks do well, if indeed IT does well post TCS, then there's no reason for the market to not do well. So keep that at the back of your mind. A couple of broking recommendations that came in, and I think we're bringing, one is Jeffries on Adani Ports, and one is the Macquarie note on information technology. Now, this is why I was telling you that watch out for IT. What Macquarie is saying that the managed services business vertical or segment had a very strong 24% YOY growth in Q2 CY21, which is April to June, which was aided by mid-sized deals. And ISG has raised its growth outlook for managed services deal awards for CY21 from 5% earlier to 9% now, and which is, therefore, you could expect very strong demand tailwinds for Indian IT, aided by cloud and digital transformation. Everybody's doing that, and therefore watch out for IT in the session today. The top picks for Macquarie are Infosys. It's a marquee buy according to them, and LTI, both of which are, LTI, by the way, remember, Goldman Sachs a few days back had come out with a note saying they're selling LTI with a target price of 3,200, 3,300 or thereabouts, which is why I say, at times don't follow brokerages blindly, the targets that is, but the commentary is important. And I think this was very important from Macquarie's end for IT. So watch out for IT in the session today, by the way. And watch out for Adani Ports. Jeffries has come out with a note saying that they're maintaining the rating with the target price of 910. The key is, again, the commentary out here. Forget the target price. They're saying that of course, the stock has underperformed the Nifty by 14% recently, ever since this whole the issue about which funds are holding Adani Group stocks came out. They're saying that the group net debt to equity is 1.9 versus 3.4 times in 2015 when the first material corporate governance issue had cropped up. And according to Jeffries, such instances in the past have been buying opportunities because the business strength is there and the promoter walks the talk of solving all the things that they've said they will. So they removed that intercorporate issues that used to plague Adani Ports. And therefore, Jeffries in its wisdom believes that this weakness should be used to buy Adani Ports. They expect that all of this, which is business strength and the promoter walking the talk, will remain intact. And therefore, you might pick your own decision or make your own decision whether you are convinced by this argument or not, but could be an interesting one. So viewers, net, even though the opening might remain subdued, there are a lot of triggers for positive for specific pockets. Banks, for example, yesterday Axis Bank resolved that army canteen issue, and therefore multiple things happening around this whole space. Pick and choose wisely. Most importantly, if you're stepping out, stay masked up. Thanks so much for tuning into the Trade Setup today.